Welcome back, dividend and value investors. My name is European DGI, and today I'm going to show you why Intel's earnings are so bad and why we actually could have seen it coming. But even more importantly, I'm going to show you what the impact is of these earnings on my discounted cash flow model and how I rate Intel going forward and what I'm going to do with the stock in my portfolio. Having said that, let's get started. So guys, first of all, you can see already from the price action after hours, minus 8.3%. This is really bad. But on the other side, we're getting used to it from Intel, right? It usually goes 10% up or 10% down, now towards down. But it's really trading at a low price that we have not really seen in the last few years, $36, at least if this is also the opening price. Now, why is it so bad then? Let's have a quick look at that. Revenue fell off a cliff with 22% down, mainly due to the Intel's client computing and data center and AI groups. Now, what does this really mean? We're talking here about the PC and the notebook business and their data center server business. It fell off a cliff. Hence, they are revising their full year revenue also down towards 65 billion, and they reiterate their full year adjusted free cash flow, which is -1 to -2 billion. Yeah. What I do like actually from Pat Gelsinger, he knows how we are feeling, so he's not bullshitting us. He's really clear about it. But of course, it would really come down to his actions going forward, and I'm becoming really critical about him right now because the numbers are just worst. Having said that, what is really important to me is that they remain committed to a strong and growing dividend. They are knowing that they are in a turnaround. They know that they are having these financial headwinds at the moment. It's a bit worse than they were anticipating, but I find it always really important that they stay committed to this. We have seen in the past that the CEOs still decide to cut the dividend. Stinky from AT&T is a great example of that. However, I see Pat Gelsinger as a CEO, more straightforward, honest person, and that's why I actually appreciate how he's opening the quarterly statement. Look guys, I can go further into this report. It really makes no sense. It's just horrible. They even made a small loss in earnings, but that's not so relevant for me. It's all about the cash flow. What is more relevant for me is maybe to also show you where really the issue is, because what you can see here is that they are saying, for instance, around the client computing group, that lower revenue on PC demand, softening primarily in consumer and education, as well as OEM inventory reductions. And then if we go to the data center group, lower revenue on OEM inventory reductions, mix-driven decline and competitive pressure. So this is really what it is. But guys, why I'm saying that we could have seen this coming. Yesterday, I did a video about Texas Instruments and the PC business was under stress. It was the worst performing business segment, but it doesn't really matter for Texas Instruments because it's a really small one. But also I'm a big follower of Microsoft because it's one of my largest positions. And here they also mentioned extended production shutdowns in China that continued through May and deteriorating PC market in June contributed to a negative impact on Windows EM revenue of over 300 million. Deteriorating PC market. If we then go to now the earnings transcript from Pat Gelsinger and such, as a result of macro weakness, we now expect the PC total addressable market to decline roughly 10% this year by broadening consumer weakness, but also we are shipping below consumption as some of our largest customers are reducing inventory levels at a rate not seen in the last decade. So there you have it. It's slaughtering Intel's earnings right now. It's really a horrible number. And, you know, because of me reading the Microsoft earnings and the Texas Instruments earnings, what I did yesterday, because I had a put option sold at Intel for $40 in August, I thought like this company will probably go 10% down after hours. I had to buy it back, this put option, for $200. I sold it for $143, so I made a $57 loss on that. But I did it because this was my expectation when really sensing the earnings from the other companies, because Intel is part of the supply chain, but at the moment has one of the weakest supply chain powers, because really the other companies like Microsoft, Apple and such, Amazon, they're really deciding at the moment what's happening with their inventory. So this is important, and this is why we should always read annual reports or quarterly reports from the companies that we're interested in, because it gives us clues. Having said that, if I now go to my discounted cash flow model then, because I need to do something with this, right? It's also below my expectations. So what I can show you, when I first modeled Intel, I gave it an average fair value of around $55. It's important to know this. I had here all kinds of assumptions, but what you saw here already is growth rate I zeroed out because I started manually entering the numbers. So I expected for 2021 11.3 billion, then for this year 4 billion, next year 5 billion, and then back to a track of where it would be around 8 to 9 billion of growth at a 7% growth rate thereafter. After they turn around their business, they will get EUV machines in 2025 or late 2024. So there's an expectation that Intel really is then coming out of their turnaround. What the actuals are, however, is that it's 9.6 billion minus 2 billion. So I also start to lower my expectations for next year towards 0 billion, just zero, then 5 billion thereafter, and then coming back to the 8 billion range. It's still below what I have all of this. What is important to know, the current fair value for this scenario was $50, right? For me also as a decision to purchase the shares around $40, $45. So if I copy this information over now and expect from 2026 to come back to growth, the price would be as a fair value for $46.50. So knowing this, knowing that my average price is also still below this, I'm actually holding the stock. I don't know if I will buy more. It really depends. Maybe I could buy a little bit more when it goes below $35. But I'm not selling because I was already really conservative. I had already a margin of safety. I'm still trusting Pat Gelsinger in his vision and his strategy. I do think that he has been overestimating and he is honest about that. I give him some slack here. I'm not as tough as Stanky and such or the IBM CEOs because he's really straight to us. He's not lying about us and he has been always saying it will be difficult. I count on Pat Gelsinger to do the innovation, to get this company back on track. If he can't do it, I think Intel is dead. Having said that, what is important here? I'm not big in Intel, right? It's a 1.8% portfolio allocation for me. Yeah, 1.8%, guys. I mean, this is not large, right? If this company goes totally bust, I will not notice it in my portfolio because of other companies pulling it up, yeah? So be wise, don't go full into a company like Intel. It's not worth it. It's a turnaround. It's not a high quality company at this moment in time, but it has potential. That's why I'm invested in Intel. That's why I will hold my shares at this moment in time. If it drops below 35, I might buy a little bit more. There's still enough margin of safety there according to how I have modeled my fair value calculation, but I'm neither going big into it. It's not worth it. Guys, I hope you enjoyed this small update about Intel's earnings. Let me know in the comments what you're doing. I can imagine that this creates a lot of stress, but also really do your own homework. Really think this through. I cannot give you any recommendations. I won't do it. Investing is personal, but at least don't do anything out of panic. Give it a day or something like that. That would be my recommendation. Study it. Think deeper about it. Assess what you think about, for instance, the chip market, TSMC. What do you think about the PC consumer business? Do you think this was a one-off? Because, for instance, indeed, also the COVID sales that were being brought forward. Think about this. Be a rational investor. That's my only advice. Guys, see you next time.